Welcome to our webinar. No one is really excited to attend. I mean, it's about taxes, right? Well, in this case, we promise it will be worth your time because we are going to talk about practical and proven tax tips, and we're going to do it in plain English and in less time than it takes to eat lunch. You have probably heard of IRS forms with names like W 2 and 1040, but do you know just how many forms the IRS has? That's right, 800 of them. The IRS is one of the most complex government agencies, and it has one of its toughest jobs. Accurately collecting taxes from individuals and businesses, it's not easy. So when you deal with the IRS as just one person, it can be both depressing and daunting, but it doesn't have to be. The IRS loves all numbers and the letter W. But what does it all mean? Once you know what the forms are for, you can get a better sense of how the entire income tax process works. So let's start with the small numbers and work our way up. No one likes paperwork, but this is the best IRS form. Why? Because its sole purpose is to show you how much you earned in the previous calendar year. It also shows how much tax was withheld, which lowers your tax bill or gets you a refund. We'll talk more about withholding in a moment. A W 4 is what you fill out so you can get a W 2 the next year. A W 4 is what you fill out when you start a full time job. It lets your employer know how much you want withheld from your paycheck, and you can also use it to adjust your withholdings throughout the year. A W 9 is what you fill out when you work freelance or a side gig. It tells the IRS how much you are making as an independent contractor. If you make more than 600 a year from one employer, you need to fill out a W-9. Less than that, you do not need to declare that income at all. A 1099 is the form you get back from the employer who paid you as an independent contractor. It notes exactly how much you earn on that side job. So when you file your taxes, you might be sending a W 2 for your full time income and a 1099 for your freelance income. Depending on your withholding, you may have to pay something or you might be getting a refund. Whenever you get paid, your employer removes or withholds a certain amount of money from your paycheck. This withholding covers some or all, and sometimes too much, of your taxes. Why do that? Well, otherwise, you would owe thousands of dollars on April 15th, and not many of us are organized enough to save for that. So the law says employers in every state must withhold money for federal income taxes. Some states and even cities also require tax withholding. The tricky part of withholding is that it isn't user friendly. It uses simple numbers from 1 through 4, but it can get confusing to figure out just what you should declare. Your income and some other factors may give you the opportunity to add additional allowances. You might want to consult a tax pro for this because they can help you achieve the sweet spot, which is no refund, no tax bill. Here's the thing about withholding. Everyone loves getting tax refund checks, even though that's not ideal. Steve Rode, a longtime personal finance expert, laments that many Americans use tax refunds for what he calls forced savings accounts. In other words, since we have trouble saving money, we let the IRS do it for us. Problem is, the IRS doesn't pay us interest, it keeps it. So, all tax experts say the best thing to do is to keep your refund small and then save your own money throughout the year, maybe earning a few dollars in interest in a savings account or even investing it in a retirement account where it can make real money. But why let the government hold on to your money? It doesn't make dollars or cents. Now, let's talk about what happens when you cannot pay your taxes or you already have fallen behind. Even if you're current on your taxes right now, it is helpful to know this stuff. That way, should you or anyone you know get in trouble with the IRS, you will know there are legal ways out of this problem. As a matter of fact, what surprises most Americans is that the IRS wants to help you get out of trouble. You might think the major way to anger the IRS would be to not pay your taxes. Mm-mm. Actually, that's not the case. After all, the tax code is complicated, and the IRS knows that. So they actually want to work with you to make sure everything is proper and legal. But if you ignore their letters, well, then they get upset. Listen to Tom Bastardis, a CPA and tax preparer with 3 decades of experience. Tom says you should never ignore a letter from the IRS. An unopened IRS letter could eventually lead to bank account levies, garnishments on your paycheck, loss of appeal rights in tax court, even a tax lien on property. Not all IRS letters are bad. In fact, the IRS will send you a letter if you are owed a refund or if the IRS just needs more information about you. Of course, the scariest IRS letters are the ones that say you owe money. But you don't want to ignore any IRS letter. These are the worst to ignore. As Tom Bastardi says, that can result in the IRS eventually seizing your assets. Again, as Tom Bastardi says, the IRS isn't trying to scare you or even intimidate you. They just want what they think they are owed. If you get a letter saying you owe back taxes, Tom recommends after opening the letter, you should immediately call an accountant. Why? Because this is one time that do it yourself doesn't really work. Regardless of whether you call an expert or go it on your own, the crucial first step is simply taking that first step. Jacob Diane has been a tax attorney for more than a decade, and his firm has helped more than 60,000 clients. He says nothing is more costly than waiting to reply to an IRS letter that sent to you. If it's a simple matter, you might want to handle it yourself. But Jacob agrees with Tom Bastardes and says for more complicated matters, you will actually save money hiring a professional. Now, the number one reason people wait too long to reply to the IRS is that they want to figure out all the angles first. But that's impossible, even for the pros. As Jacob Diane says, the IRS is very secretive about its process. So the real goal isn't figuring out why the IRS does that, what it does. The goal is figuring out what you can do when they are looking at you. Whenever you owe the IRS, it's because you have tax debt. You either paid too little or too late. Now, the IRS wants you to settle up. First things to know though, the IRS cannot send you to jail. Debtors' prisons have not existed in this country since the mid 1800s. As long as you are not engaged in tax evasion, you're okay. So, what is tax evasion? It's intentionally not paying or underpaying your taxes. That is different than making a few honest mistakes or not having enough cash to immediately pay what you owe. That said, lots of bad things can happen if you don't work with the IRS to pay back what you owe. The IRS starts a clock on your back taxes, and the longer it takes you to settle up, the more penalties you will owe. If you refuse to work with the IRS will work you over. The agency can garnish your wages and seize money from your bank account. That is never pleasant. The IRS cares most about compliance. What is that? It's the fancy way of saying you are talking to the IRS and working out a plan to pay everything off, to pay everything off. Of course, the IRS does not take your word for that, so it reviews your records. Basically, as Jacob Diane says, the IRS wants to be confident that you will not owe in the future before they agree to a resolution program. This is really where it starts to get tricky. You usually have 72 months to strain out everything out. But the IRS is not the cold, heartless agency you have heard so much about. If you can prove financial hardship, the IRS will often cut you some slack in various ways. The problem is figuring out how to communicate all that to a large bureaucracy. When you owe back taxes, you also get hit with some complex terminology just to define that first one. CNC status is what you get if paying anything toward your tax debt would throw you into financial crisis. In that case, there's a whole separate process you follow. Of course, if you're financially struggling, CNC status is what you want. But here's the catch. The IRS just doesn't tell you, hey, here's something that could help you. That's why you need to work with a tax professional who knows all the ways the IRS will give you a break legally. But there's a difference between what is legal and what is widely known. Another benefit to consulting a tax pro is avoiding tax scams. Sadly, there are bad people out there who look for people with tax problems and then try to rip them off. You should know that the IRS would never call you your personal residence and threaten to send police to your home. These scammers are preying upon your fear to give them money or information they can use. The truth is, the IRS will send out several notices before anything negative happens. The best tax pros who can help you have a few things in common. They have been doing business for years, have great online reviews, and are highly rated by the Better Business Bureau. They are also quite measured in their promises. As the FTC says, if someone is promising to solve your problems without even reviewing your information, watch out. Better yet, seek out an attorney who works at a firm specializing in tax relief. Ethical pros don't charge you their entire fee up front. Run from anyone who demands that. Also, be leery of anyone who says you qualify for a program without diving into your details. That's impossible. Also, avoid any ads you see online or hear on the radio that claim to give you secrets the IRS doesn't want you to know. If you have learned anything today is that the IRS wants you to know everything. The agency may not explain it well, but the IRS wants its money, and it will not get that money if it keeps secret. So that's not the end. It's just the beginning. If you owe back taxes or fear you're about to, all is not lost. In fact, you can get professional help and get your life back on track. The IRS might not be your best friend, but it's not your worst enemy either. You just need a knowing ally on your side. Thank you.